Hi, everybody. Thanks for joining Backseat Broker, the podcast where we dig into resources for homeowners, buyers, and sellers. Today, I'm delighted to have guest Damian Gonzales of Home Mortgage Alliance. Hey, Damian.
Hey, Jim. Pleasure being here. And thanks for the invite, by the way.
Yeah, you're welcome. Thanks for coming on. So today, we'll be diving into the loan-making process and what market rates may be doing in the future. Before we get started, I just want to get a sense of how long you've been a mortgage loan officer.
So I've been doing mortgages for the past decade now. I kind of got started, back in my finance days at Bank One, eventually Chase, and then transitioned into BBVA Compass. I moved over and from there, I've been doing it since 2011. So it's actually 11 years now, over a decade. Yep.
Great. Fantastic. Hi, everybody. For buyers who are new to the home buying process, can you lay out the steps a buyer would go through in geting a loan?
Yeah, definitely. So I really like to keep it, very simple for buyers because the process can be a little lengthy.
Yeah, you're welcome.
But I've always noticed, and I'm a big advocate of trying to keep things as simple as possible. So some of the steps that buyers are going to go through. One is obviously the initial phone call.
Let me repeat that.
And
first, I just want to get a sense
making that
of
initial phone call is super important, and showing interest. But once you do that, there's three basic components that most lenders are going to ask, and typically what I do is I like to go over the three basic components. One being their credit. Okay, we want to know what your credit, borrower's credit looks like, and if they have any credit, and if not, we're going to probably prepare them and give the agent a time frame of what it's looking like. Okay, so you do have to have some kind of credit. It's not necessarily all the time. There is exceptions to the rule, but those are far and few between. Okay, the second component that they're probably going to go through is we're going to ask about your employment history. Okay, we're trying to gather a minimum of 2-year work history. Doesn't necessarily have to be with the same company per se, but it does help because it shows stability in what that buyer's employment looks like. Okay, so we're looking for a 2-year plus work history. And then the third component is we want to know where the money's going to come from for the down payment. Now, most loan programs, I'm not going to say all, there's a few that don't need a down payment. For example, rural areas will offer 100% financing if you're looking to buy in a rural area. And if you're a veteran, those are great loans that you can get into 100% financing. But other than that, most likely there's going to have to be a down payment that's going to have to be brought into the transaction. And with that, we want to know where the money's going to come from, okay, or if there is any money. And if not, then that's where we kind of gauge on what kind of loan financing we're going to be able to qualify our borrowers. We're going to ask about your employment history. So we're trying to gather 3 basic components. That's just the beginning of the process, and then obviously you're going to continue with the loan application. So that's where we're going to gather a little bit more information, and it's going to get a little personable. We're going to ask for social security numbers, right? We're going to request date of birth. We're going to want to know your address history for the past 2+ years. Okay, obviously I touched on the employment history. So that's just part of the loan application process. After the loan application is done, then we work up different loan options for our borrowers. Okay, for the buyers, we're gonna see where they're at, and we're gonna try to fit together the best option that best fits their needs. Okay. Most likely, so that's some of the basics on the loan qualification or the process.
Thank you for that. I know that FHA is a possibility for certain borrowers. Can you talk a little bit about how FHA works for first-time home buyers?
Definitely. I think FHA, which is the federal loan, it's Federal Housing Authority, and it's actually backed by the federal government. It's insured, mortgage insured by the federal government. It's a little bit more accessible because they do require less of a down payment. And that program in particular does require a 3.5% down payment, which comes out to be $3,500 for every $100,000 that you want to purchase. Right, and with that program, there's also the opportunity to try to get into down payment assistance if and when needed. You don't necessarily have to be a first-time home buyer per se, but obviously it does help. That's FHA financing is great for whether you're a first-time home buyer or you don't have a huge access to a lot of money to bring to the table as a down payment. FHA is a great option. So that's
great.
Some of the basics.
Okay, great. Can you talk about the importance in being pre-approved while looking for a home?
Yeah, that's a great question. So the main thing about getting pre-approved, there is a difference between a pre-qualification. So that's when a lender is going to just take your loan application, run credit, and put together some numbers given the information that you provided. The importance of a pre-approval is it does give us, the lender, loan officer, an opportunity, so my team and I, we can actually process the loan. We can request verification of employments when needed, and we can start working on all that up front. We're going to request, bank statements. We're going to request pay stubs. We're going to request tax returns and W-2s for those W-2 borrowers. Or if you're self-employed, we're going to request your Schedule Cs. Okay, that's part of your tax return. And then depending on what kind of self-employment you have, then we might request additional documentation. But having all the documents and having the buyer present the supporting documentation to the lender just gives us a little bit more surety on the pre-qualification or pre-approval that we're going to give the borrower. So it's going to give them a little bit more sense of peace, I should say, or it's going to give them a little bit more surety as to their pre-approval is solid. Okay, and once the buyer goes under contract, it helps tremendously with a lender is going to with actually, it smooths out the process a lot faster because typically if we present all the supporting documentation to an underwriter up front, and then we have the buyers start shopping, okay, so my team and I, typically all we're going to need is the buyer's contract, so they need to choose a home. We're going to request the title work, okay, which typically right now is done within 48 hours or less. We're going to request the homeowner's insurance, so we want to know where they're going to get the homeowner's insurance from, and typically it's going to be from their agent, their insurance agent, and then we're going to request the appraisal. Okay, the appraisal is an important part of the home buying process as well. So that's really all we'll need, and then everything else we already have. Sometimes we will have to update some documentation depending on how long it takes them to find a home, right?
Sure.
So we might need to update a pay stub here and there. We might need to update a bank statement here or there. But other than that, it just, I think it gives them a little bit more peace of mind going through a pre-approval process. Okay.
Yeah, and it sounds like can be a little bit daunting going through all that work, but getting it out of the way, I think, is what you're saying is the best thing to do, so that when you're in a contract negotiation, you don't have that sort of hanging over your head, trying to get approved at the same time you're trying to solidify a contract. Is that fair to say?
Yeah, and you made a great point. Sometimes it can be daunting for a buyer having to do everything with, their home inspections, having to do everything on the contract end. So it can be a little bit daunting when it comes to still you're under contract and then having to still present more conditions, more documentation. It just puts bars in a bad spot if you don't do the pre-approval up front.
Sure.
And right now, most lenders, we do have the capacity to be able to run files back 2-3 years ago when the market was a lot busier. Then everything was a little bit more flooded, but right now we do have the capacity to do that. So
sure, fantastic. Okay. So I've been getting your newsletters, and they're really informative, and you talk about market rates and things like that. Now I know in the later half of last year, market rates have climbed a little bit. What's your sense or prediction for what market they're going to do in the future?
Well, I think it really comes down to the main reason is this whole inflation thing, right? So the monetary policy with the federal government currently has been they want to tighten up purchasing. So by doing that, their monetary policy right now is to increase the rates because they want to control spending, they want to control inflation, right? So the way that from what I've been reading, in different sources, as long as the Federal Reserve, it sounds like they're toning it down a little bit, and they're not going to be increasing the prime interest rate as much or as fast this year. I think we're going to see things start to settle down a little bit. So we might have been to a peak. I think we're going to see a little bit of a plateau. Okay. And that's kind of the projections and the expectation this year. We might see a little bit of a plateau. We did see a little bit of a rate drop just recently, but other than that, I do expect a plateau.
Okay. Yeah, that's actually good news for buyers and for sellers. A little bit of stability may help people get back out there and start looking again. Okay. Great. Well, Damian, thanks so much for coming on. I really appreciate it. And any buyers that I have, I'll be sending your way, and we'll do some good business this year.
I appreciate that. And once again, I know there's a timeline, they say, regarding the Happy New Year, but Happy New Year to you and all your listeners. And let's expect a good 2023. So
sounds good. Thanks, Damian.
Thank you. Have a great day. Bye-bye.
Okay.
So the way that from what I've been reading, in different sources, as long as the Federal Reserve, it sounds like they're toning it down a little bit, and they're not going to be increasing the prime interest rate as much or as fast this year. I think we're going to see things start to settle down a little bit. So we might have been to a peak. I think we're going to see a little bit of a plateau. Okay. And that's kind of the projections and the expectation this year. We might see a little bit of the plateau. We did see a little bit of a rate drop just recently, but other than that, I do expect a plateau. So
okay, yeah, that's actually good news for buyers and for sellers. A little bit of stability may help people get back out there and start looking again.
Yep.
Okay. Exactly. So, great. Well, Damian, thanks so much for coming on. I really appreciate it. And any buyers that I have, I'll be sending your way, and we'll do some good business this year.
I appreciate that. And once again, I know there's a timeline, they say, regarding the Happy New Year, but Happy New Year to you and all your listeners. And
thanks.
Let's expect a good 2023. So
sounds good. Thanks, Damian.
Thank you. Have a great day. Bye-bye.
Okay. Bye.